Sunrise coming up. June inflation spikes to 5.3%, sparking fears of trend reversal and expected freeze on Bank of Ghana rate cuts.
If care is not taken, we may end up recording double-digit inflation by the close of the year.
The Bank of Ghana may be tempted to actually maintain the policy rate at 14%.
And Ghana Chamber of Mines warns prolonged uncertainty over mining lease renewals could weaken investor confidence and threaten leading African status.
We believe that we should be able to negotiate what we want, to make it a win-win such that the Ghanaian will benefit from these investments when they come, that there will be value retention, there will be development of our country.
Plus, chiefs demand mining royalties for traditional authorities be increased to 30% from 8% to match community management roles.
That figure is woefully inadequate, and we are demanding 30% of the royalties instead of the 8% that they are paying now.
Details of these and many other stories lined up for you. I am Michael Ogbodu. Stay tuned. Thank you so much for your time. Straight to our top story. Ghana's annual inflation spiked sharply to 5.3% in June, driven by rising non-food costs and local food items like ginger, shrimps, mangoes, and bananas. This third consecutive monthly increase has led an economic analyst to predict that the Bank of Ghana will halt further interest rate cuts, while a financial economist warns the rise could signal a fundamental reversal of the country's disinflationary trend.
Latest figures from Ghana Statistical Service indicate that the recent spike from May's 3.7% to 5.3% in June was heavily propelled by mounting non-food costs, including transport, housing, and education, alongside significant domestic price pressures from specific food items such as ginger, shrimps, mangoes, and bananas. According to government statistician Dr. Alhassan Idrisu, the June inflation is driven primarily by domestic economic factors.
Locally produced items contributed 86.6% of the overall inflation recorded in June. We've not been able to keep pace with regards to the production of ginger compared to the demand for it.
Finance and tax analyst Nelson Kujo Kwagbeji notes that there is no cause for alarm despite the recent uptick in the consumer price index.
The easing of geopolitical tensions in the Middle East, which actually is accounting for the reduction of prices at the pump, the footprint of Bank of Ghana within the market by way of absorbing the excess liquidity from the market. And so all these factors will come together to decelerate the inflationary pressures.
However, financial economist and senior fellow at the Africa Policy Lens, Dr. Eric Bachiadom, warns of a potential reversal in the disinflationary trend.
The 5.3% inflation reported for June this year shows that there has been an uptick in inflation about 3 consecutive times. And if care is not taken, we may end up recording double-digit inflation by the close of the year. Within May and June alone, the uptick inflation in percentage terms is around 43%.
Kwagbeji, in a separate projection, suggests that the Bank of Ghana will likely maintain its tight grip on the economy.
The Bank of Ghana may be tempted to actually maintain the policy rate at 14% for the second consecutive time in order to create that room to contain any inflationary pressures. We don't expect inflation to go beyond the 8% plus or minus to target by the Bank of Ghana by December 2026.
The June inflation rate of 5.3% is still below the central bank's target band of 8% plus or minus 2.
And that was a 3 Business News Desk report. Away from that, the Ghana Revenue Authority has announced a temporary extension for the filing of second quarter taxes and May 2026 statutory returns following severe flooding across the capital and its surrounding areas. The intervention, approved by the Commissioner General, is designed to serve as a targeted relief measure to ease operational pressures on businesses and taxpayers whose operations have been disrupted by the recent heavy rains. This report has the details.
Under Ghana's standard tax calendar, returns for corporate income tax, personal income tax, value-added tax, national health insurance levy, and communication service tax for the specified periods were originally due on Tuesday, June 30, 2026. With the new directive, the deadline has now been shifted forward by nearly a week to Monday, July 6, 2026. According to a press statement issued by the authority's Communication and Public Affairs Department, taxpayers who successfully submit their filings by the new July 6 deadline will not be subject to any late filing penalties. However, standard statutory penalties will immediately apply to any returns submitted after the extended date. To minimize travel risks and bypass fiscal disruptions caused by the floods, the GRA has urged the public to heavily utilize its online taxpayers portal and alternative digital channels. In a statement, the GRA said it remains committed to maintaining uninterrupted tax administration while supporting businesses during this difficult period and safeguarding the revenue needed for Ghana's national development. Taxpayers facing severe operational bottlenecks due to the weather conditions are advised to reach out to their nearest GRA Taxpayer Service Center for administrative support.
And that was a 3 Business News Desk report. Moving on, the Ghana Chamber of Mines says greater uncertainty over the renewal of mining leases will be critical if Ghana is to maintain its position as a leading mining destination in Africa. The call comes amid growing uncertainty in the industry following government efforts to secure greater local ownership and increase the value retained from the country's mineral resources. Speaking at the Mining and Development Forum organized by the Chamber, its Chief Executive Officer, Dr. Engineer Kenneth Ashigbe, warned that prolonged uncertainty could weaken investor confidence.
We believe that we should be able to negotiate what we want, to make it a win-win such that the Ghanaian will benefit from these investments when they come, that there will be value retention, there will be development of our country, as the investors also are able to also get good investment and are able to come in. Again, I would urge all of you journalists to just go and look at the heat map of where exploration investment is going, and you will notice that it is going to a lot of the countries around us. The interesting thing is that my colleagues at the Cote d'Ivoire Chamber of Mines, they have an objective to be #1 gold producer in the next 10 years. Where do you think they are going to take it from? And how do you think they are going to take it from? How are they going to take it from us? So it is important that we make sure that this issue about the security of tenure of leases is something that we still continue to guarantee, but we ensure that we do things that help us to retain a lot more value and are able to develop our country.
That was Chief Executive Officer of the Ghana Chamber of Mines, Dr. Engineer Kenneth Ashigbe, speaking there. Meanwhile, the President of the National House of Chiefs and Paramount Chief of the Sisri Ahiaso Traditional Area, Ojiahoho Yaojibi II, has called for the share of mining royalties allocated to traditional authorities to be increased to 30%. He argued that the current allocation is inadequate and does not reflect the role traditional authorities play in managing communities affected by mining activities.
$1 million, and mining is going on in an area, let's say 1 month or a quarter is 1 million, and only 10,400 comes to the traditional area. And don't forget that amount, they said Nana should use it to maintain his status as a chief. When you say Nana should use it to maintain his status, it means Ahinkwa, palace, painting, water that will provide everything that we do is involved. And what is 10,000 times, even if it is 12, we are talking about 120,000. And what is 120,000? So it's woefully inadequate. And aside of that, Nananum also gives scholarship. They help the communities, the aged, and so on and so forth. So that figure is woefully inadequate. And we are demanding 30% of the royalties instead of the 8% that they are paying now. When the 8%, they never consulted us. I'm hearing this for the first time.
So that was the president of the National House of Chiefs and Paramount Chief of the Sifri Ahwiaso Traditional Area, Oje Ahohoyao JB II. Now, the government of Ghana is set to return to the domestic money market on Thursday, July 2, 2026, with a target of raising 3.371 billion cedis through its weekly treasury bill issuance. Today's auction, designated as Tender 2014, will feature the standard short-term maturities, opening up bids for the 91-day, 182-day, and 364-day instruments.
This borrowing target of 3.371 billion cedis comes off the back of a strong rebound in investor appetite during the previous week's auction. Data released by the Bank of Ghana revealed that during the prior week, total investor bids reached 7.37 billion cedis. Out of those tenders, the state accepted 6.01 billion cedis, exceeding its initial fundraising target by more than 1.4 billion cedis. 3Business attributes this strong surge in primary debt demand to a steady upward correction in yields, which has continuously drawn institutional investors back to short-term government securities. In the last auction, interest rates climbed across the entire yield curve. The 91-day bill advanced to 5.73%, the 182-day rose to 7.69%, and the 364-day instrument experienced a major spike to clear at 12.82%. The Treasury is anticipating that the combination of attractive yields and highly liquid conditions within the local financial market will sustain the momentum of oversubscriptions heading into the July 2 sale.
And that was a 3Business News Desk report. Let's bring you updates now from the currency and the commodities market.
On the interbank foreign exchange market, the dollar is selling at 11 cedis, 35 pesos. It recorded no change. The British pound is selling at 15 cedis, 9 pesos. It gained 5 pesos. The euro is selling at 12 cedis, 92 pesos. It also lost 3 pesos. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities market, Brent crude is trading at $71.59 per barrel. Gold is trading at $4,062.21 per ounce, up by $54.19. Cocoa is trading at $5,092 per ton, up by $14.
And those were updates from the currency and the commodities market, bringing an end to the business news on Sunrise. For more stories, check out our website, it's 3news.com/business. I am Michael Ogbodu. Thank you for tuning in. As always, please stay safe. And your man is in the studio now. Togbe Gagai.